Hey everyone, and welcome back. Today we're tackling a topic that causes a lot of confusion but is absolutely fundamental to trading with the smart money: the crucial difference between a break of structure and displacement. Understanding this distinction will completely change how you filter your trade setups and identify true institutional intent. Let's be clear from the start: BOS and displacement are not the same thing. While they often happen together, they serve very different purposes in our analysis. Getting this right helps you spot high-probability setups and avoid the false signals that trap most retail traders. First, a quick reminder. Market structure is simply the framework of price, the sequence of swing highs and swing lows that shows us the ongoing battle between buyers and sellers. It's the roadmap we follow. Now, let's define our two key terms. A break of structure, or a market structure shift, is a structural event. It happens when price decisively breaks and closes beyond a previous swing high or low. This is a key signal that the trend might be changing or continuing with new strength. Displacement, on the other hand, is all about momentum. It's a strong, impulsive price move, often shown by a large-bodied candle or a series of them. This move shows us the force and intent behind the price action and often leaves behind fair value gaps. This is the core of it. Think of it this way: BOS answers the question, where is price going? It's about the location and the structural level being broken. Displacement answers the question, with what strength is it moving? It's about the velocity and momentum. Traders get confused because they see a big, strong move and immediately think the structure has broken. But you can have a strong move that doesn't break any key structure, and you can have a break of structure that's weak and lacks momentum. Let's look at their fingerprints. A valid BOS typically has a strong candle closing beyond the level, confirming a change in direction and often marking the end of an accumulation or distribution phase. Displacement is characterized by that impulsive surge, a spike in volatility, and it's the primary creator of those fair value gaps we love to trade. It's the institutional footprint in the market. Now for the critical scenarios. A BOS without displacement can be a red flag. If price just barely scrapes past a swing high or low with a small-bodied candle and no momentum, it's often just a liquidity sweep or a false breakout. It lacks conviction. Conversely, you can have displacement without a BOS. This is a strong move that happens within the existing market structure. It shows institutional activity and momentum, but it hasn't yet changed the overall trend. It's a warning that a break might be coming soon. So, how do we confirm a true, high-quality break of structure? We use a checklist. Look for a candle body closing beyond the level, supported by volume or momentum, and ideally, followed by displacement. Don't just look at the wicks. This makes perfect sense from an institutional context. Big players often use displacement first to move price and engineer the market. The actual break of structure is the final confirmation that their plan is working and a new phase is beginning. What does this mean for your trading? Use the BOS to identify the potential shift in bias. Use the displacement to confirm the strength behind that shift. Then, look for a retracement back into the displacement zone or a fair value gap for a refined entry. The most common mistake is trading a weak BOS without any confirming displacement. This is how you get faked out. The ideal, high-probability sequence is: a break of structure confirms the structural intent. Strong displacement validates the momentum. A retracement offers you a low-risk entry. Let's summarize one last time: BOS equals structural confirmation. It tells you where price is likely going. Displacement equals momentum confirmation. It tells you with what strength it's moving. Your edge comes from trading where both of these concepts align. You want to see structural intent backed by institutional strength. Avoid acting on one without the other. Master this interplay, and you'll elevate your market structure analysis to a professional level. Thanks for watching, and I'll see you in the next lesson.